Looking at the liquidity risk score, we're neutral. Looking at leverage, we're kind of low. Not even neutral, we're pretty low. Which is suggestive, as we go through more of your work, that we've got a potentially larger move at play here because we've got very little headwinds.
Yeah. So it's still exactly very little headwind. If the positioning was so one-sided at this point, especially around an all-time high, like we got in this one here back in Q1, this was pretty much level with the old 2021 high. So you had old resistance, but you also had far too much leverage and positioning all one way right at the top. So it was just it was a recipe for a pullback. We don't have that now. So it's just, it's.
After a brief pullback, Bitcoin is once again approaching record highs, but this rally feels different. There's no retail hype, no explosion in leverage, and none of the euphoric energy that usually signals a cycle top. Instead, the climb has been slow, calculated, and driven by cautious positioning, something far more sustainable. That's why macro analysts Raoul Pal and Jamie Coutts are paying close attention. In a recent discussion, they explained why this could mark the beginning of a longer, more resilient crypto cycle, one that's not just a flash followed by a crash. Middle Eastern sovereign wealth funds are now viewing Bitcoin as a strategic reserve asset, while also investing in blockchain infrastructure on a national scale. Meanwhile, global liquidity, one of the most powerful forces behind macro asset moves, is showing signs of a breakout after a long decline. If that capital starts flowing into crypto, the upside could exceed all expectations. Stick around as Raoul and Jamie break down what this setup could mean for the next phase of the crypto cycle.
Fantastic. So there's a lot to dig into. And before we start, just observationally, I was out in the Middle East, last month, I think it was, and sitting down with the sovereign wealth funds. And the mandate across the entire region, from Saudi to Abu Dhabi to Dubai to Bahrain to Qatar, is AI and blockchain. And not just using Bitcoin as a reserve asset, but also building the entire government infrastructure on blockchain. Driving licenses, property deeds, the whole bloody lot. So it's it's fascinating to see. And then a lot of people say to me, well, if all of this money's coming in from the sovereigns, that may produce an outside return. And I'm thinking, well, if we're going from 3 trillion to 100 trillion, which is my estimate by just extrapolating out the trend rate of growth, you need larger players each time because the market cap is bigger, right? There's no way you're going to get to 15 trillion this cycle unless you've got bigger players. So it's kind of, I don't think it's what people think it is. I think it's just a function of the size of the market. The bigger it becomes, the more that those people are involved, and the more blockchain technology gets used, the more it uses the alts for infrastructure rails, for new forms of compute and storage and all the other things that are coming. So I just thought it was interesting because everyone's like, oh my God, it's a super cycle because of this. I'm starting to err towards, well, we've talked about this before, a longer cycle, just because the business cycle is still below 50. So generally it takes a while to climb up. And then we use the GMI Financial Conditions Index, and that has a 9-month lead. And with the dollar breaking down, even today, it's starting to suggest that this may go even into Q2 2026.
This is how you buy and sell crypto the easy way, using eToro, one of the world's leading trading platforms. If you're new to crypto, eToro makes it super simple. Let me show you how I bought Solana in just a few taps. First, head to the search bar and type in Solana. Tap on it, then hit trade. I'm going to invest $10, that's the minimum. Now just hit buy and done. I now own Solana. Selling is just as easy. Go to Portfolio, tap your Solana asset, then click Close and confirm your sale. Super simple. That's how quick and beginner-friendly eToro is. But here's why I use eToro. Earn up to 4.3% interest on non-invested funds, 0% commission on stocks, and you can set up an account in just minutes if you want to start your crypto journey. Use my link in the description to sign up to eToro today and start trading.
So it's like the whole cycle got shifted because rates didn't get adjusted and the dollar was sideways for a period of time. So it feels that potentially there is a chance, and again, there's no guarantees in this world, that we're more like 2020 than we are in 2021. Or it's it's spookily similar to 2017 for me. So let's go through some of your charts, some of your framework, because I think people are going to love to see the work that you put in. I don't know where you want to start with that deck or whatever you think the best narrative are.
Well, I think we could I think we could sort of start with just the actual risk framework that I built, looking at global liquidity first. So what I've got here is just my version of global liquidity index, which is, aggregation of private credit through, global M2s, or the global money supplies of large countries, central bank balance sheets, FX reserves, US net liquidity. And
this is similar to our GMI total global liquidity. Yeah.
Yes,
okay,
it is. Yeah. Yeah. So what's your number roughly? Do you remember?
I don't know actually.
Yeah. Well, it's you can see that there's a very tight correlation. Like, depending on the data set you use, the regressions, the R squared, or the the explanatory factor of global liquidity on the Bitcoin price movement is very, very high. It's like one of the strongest relationships in financial markets.
Yeah, we get, using ours, we get 90%, 88%.
Yeah, and I'm in that ballpark as well. But what's interesting is that that's a relationship, that's a sort of linear relationship over the time period, but there are periods where Bitcoin becomes hypersensitive to the changes in liquidity. We've had these periods where, global liquidity goes sideways, and actually Bitcoin usually tops before global liquidity tops out. So it's
like when the rate of change of global liquidity slows down, it starts topping.
Yeah. Because this has been driven by, in the past, a lot of central bank activity as well. So central banks move very, very slowly, but the market detects when when break-even starts to break high, the market starts pricing in higher inflation, that the central banks will have to pivot. But they don't pivot on a dime unless it's an emergency when they're adding liquidity, but never when they're withdrawing. So usually Bitcoin will sniff it out many months in advance, and we'll see the top form, and then global liquidity will roll over. But the contraction periods in global liquidity traditionally have only been sort of 24 months, so 2 years, and that was in 2014 and 15, then in 2018 and 19. The one that we've just gone through has actually been 3 years. So to your point earlier about the cycle being elongated, if you look at global liquidity here in white, it's been it was down sharply in 2022. And then we just had this sort of contraction period, like a wedge pattern that we've sort of been squeezing into and now breaking out of. So a longer contraction
period. Buying that low in the first, that's what we did. And it worked really well. Back end of 2022, when global liquidity, it doesn't give the strongest price action, but I don't know, Bitcoin's up 6x since then. So it does work just by getting the bottom of it. But the breakout is when it really counts, right?
Yeah. So the tops are harder, but the bottoms are easier actually, because, at the bottom, it's usually sharp central bank actions. And that's the signal. You sort of don't have to sort of second guess that. And now that we're starting to break out, and you look at this sort of breakout of the last contraction period, and obviously 2020 was exceptional, so we're not looking to repeat that. But generally, if you look at the previous times we've gone out of a contraction period, that has been what I define as like the super bullish liquidity regime. So, global liquidity can only contract or go sideways for a certain amount of time because the whole system is so indebted that their default risk rises. And also just the interest cost on debt becomes too excessive. So there's always an impulse to add liquidity. And so like a beach ball under the water, if you keep it down for too long, it's going to burst out. And we're starting to break out now. And so in the past, when we've seen a breakout of the previous all-time high in global liquidity, Bitcoin's sensitivity to the changes in liquidity triple at least. Sometimes 4 or 5x. So
right.
in my analysis, global liquidity goes up by 1%. Bitcoin usually rises about 7%. But in these particular regimes, that goes to 20 to 30 times. So a multiplier of 5.
According to Jamie Coutts' research, global liquidity has a stronger impact on Bitcoin's price than any other single factor, and right now, that liquidity is beginning to expand after the longest contraction in more than a decade. Historically, these breakouts in liquidity have triggered Bitcoin's most powerful bull runs. What makes this cycle especially unique is the context. Despite years of aggressive rate hikes and financial tightening, leverage remains low and speculation is muted, creating ideal conditions for a high-conviction, sustained rally. This setup is significant because Bitcoin typically bottoms when central banks shift policy and inject fresh liquidity into the system, not months later. That's exactly what we saw at the end of 2022, and the current pattern looks strikingly similar. Coutts calls this environment a super bullish liquidity regime, a rare alignment where Bitcoin becomes extremely responsive to capital flows, often resulting in 3x, 5x, or even 7x price surges during past cycles. And this doesn't even include the growing wave of sovereign adoption that Raoul Pal has been tracking, a separate but equally powerful catalyst with global implications. When institutional-grade capital meets macro tailwinds and favorable positioning, the outcome tends to be explosive.
You have a very strong signal for a looming market top, because derivative like open interest and the factors that go into the leverage component of the derivatives risk score are very finely tuned to tops and also bottoms. So that plus also unrealized profit, which you can see on chain, come together in a very good way, like in terms of the confluence that you can get from it to give you sort of high probability zones of when things will top and bottom as well. So this was indicating, that in the early part of 2024, just a couple of weeks before we had that top, which I'll show you with the next chart on the derivatives one, was really driven by the derivatives market. Just where it was so excessive in Q1 with the launch of the ETFs that it was destined to correct. It only corrected by 25-30%, a pretty normal correction, but it did take about 6 to 7 months to unwind all that positioning. And then we also got an overvaluation read on the global liquidity risk score in December as well. And if you remember back then, you were talking about it, I was talking about it, like the dollar was strengthening, like liquidity was tightening as we rallied very, very sharply into Christmas. And of course, then we had the fallout for the next sort of 3 or 4 months. So now where are we? We're at a score of 3. We are neutral. There is sort of that 40% rally off the lows of April is just the normal, the normal relationship playing out.
Jamie Coutts has developed a comprehensive strategy that adapts to real-time market conditions. At its core is a system that monitors global liquidity shifts, combines them with data on leverage, investor positioning, and unrealized profits, and generates a live risk signal, a kind of market dashboard designed to track where we are in the cycle. Right now, that dashboard is flashing green. Liquidity is on the rise, leverage remains low, and the market is positioned in a healthy, non-speculative way. Even after a 40% rally since April, Bitcoin continues to move in sync with broader macro trend. What makes this moment compelling is what's not happening. Market tops typically appear when liquidity lags behind investor positioning and speculation overheat. That's not the case here. Compared to previous highs, especially the Q1 spike driven by ETF hype, the current setup looks far more balanced and sustainable. There's no panic buying, no aggressive leverage, and no euphoric sentiment driving price. If these conditions hold, this could mark the beginning of a fundamentally different crypto cycle, one built not on hype, but on structural strength. This time, it's being led by capital rotation, improving macro tailwinds, and growing institutional involvement. It's not the loud rallies of the past. It's something quieter, stronger, and potentially more enduring. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.